Hi and welcome back to the Conscious Day Trader. I'm Yanis and today we're going to break down another pound USD dollar. Extremely difficult day. It's the trade from yesterday. It was the last day of January and the pound USD wasn't behaving like it has been behaving for me. So we had to manage that trade. This is probably the reason why ICT is staying out of the Forex pairs. And we're going to go in detail on what the problem was and how I got out of it, and how you should, and a lot of questions that I'm getting about stops. Why am I not stopped out when the price is going against me? So we're going to look at that. But first, let's go and see. First, we have to celebrate. We're going to celebrate. I'm going to juice it as much as I can because this is my first ever 10K, well, it's 10.8K month. You see here 36 trades. Now that doesn't mean I took 36 positions trades, so it's not a 36 lot size because I get a lot of questions about that. This is 36 repositions of two trades, of two positions. Now I would show you the MT5, but what's happened, I've passed the milestone, so they've opened a new account. And I've just received that my 125 now is going to become 150, which that is even better news because I will have a little bit more buffer zones and I'll be able to open a little bit safer the size that I want to open. But going back, super happy with this, and we're going to jump straight in because a lot of you had similar issues with me and a lot of you didn't come with profit. So let's discuss what happened in this crazy day. Now, if I had closed my position here, I would have been out without stress. I would have made 30, I got in here, 30 pips, I think, or not 30 pips, $300. Let's measure that. So I would have made 18 pips, and as you know, I normally have two positions, 250 pounds roughly each, dollars each. I get my $500 and I'm good for the day. But as we can see, it hit this fair value gap and then it melted down. And this is the issue. How could I have traded this to better? And we're going to discuss that. Where was my stops and why did I not get stopped out? What's this 23% here that I had a figure that it was going to go and hit and bounce back into the daily range? But so let's start step by step. And for people that were looking for the correlation in the previous video, this video is going to be for you because we're going to look at it in detail, and how you can use the dollar index as well as the British pound USD pair to do your analysis and take decisions upon using. What I mean by that is you switch to the dollar index. I had this open in one chart and the pound dollar on the other chart, and we'll see what this level is here. Why did I know that price is going to stop there, and why that gave me an entry as well, and how to deal with it. But let's go on the replay. We're gonna go at the 31st, last day of January at 6 a.m. Oh, we're in New York, and change it to London, and we're gonna go let's go 7 o'clock. This is when the market was opening. Now, what did I identify? From the daily, we did our normal, put the daily high, daily low, equilibrium, and you'll see that we're just above equilibrium. What had happened during the Asian session, buy side liquidity of these lows was taken out here, sell side liquidity. So we see Asian market, this is the New York, this is the London. Asian market came, created the low, and then came all the way up, filled that fair value gap, and then continued lower. Now we were selling back into this previous low, it retested the low, and what happened next is the price bounced up and retouched the low without breaking the previous low of the Asian session. We did have buy side liquidity here, which if this was going to continue lower, this was the price that where it would react. Now I was looking at this to find an entry on the long side, and what I wanted to see is this buy side having a reaction like it did and failing to break these areas here. And as you can see, we've got a fair value gap there. This is on the 2 minute, touched the fair value gap, came up, failed to retest it, and I got in here. Not the best fill, but that was my position. And as we're going to go down the line, this was 13 pips into the session, so that was about 10 pips for me, so $100. And then it came all the way to the top there. This is where I should have got out. That would have been a brilliant trade. I would have been stress-free. January would be done. I would have had $380. But I did want to hit my target, which is roughly $500. Now, should I have taken it out? Is there anything that I could have seen here that could have told me that the price was going to crash down? And this is, let's look at the time, 7:48, and we're going to go to the dollar index. So we're going to go on the 31st at 7:48. I think, let's go back to the London session, 7:48. We're about here. Let's put the replay. 7:44, let's go there. 7:48, right. So as we want to go long on the pound, what do we want to see? We want to see the dollar being weak. We want a weak dollar. Now, what did I want to see at this time? When I got in, I wanted to see a clear break of this low here and a retest. Where would be my target in terms of the index? There's not a lot of areas, if you can see, before these lows here that the price could stop the price on its track. So potentially come all the way down to this level. So things were looking good. And it did come down. This was all great indications that were aligning with my pound dollar going up. So my trade was correct. My analysis was correct. We were in discount area of the pound dollar. We were working up towards equilibrium. The dollar index was showing signs that it would potentially come down to break the previous lows. However, let's look on the hour. The dollar was at equilibrium level, and we did have these buy side liquidity highs and the 2.5 that we have been talking about, that potentially the market would want to come out. And the problem that I didn't see at the time, if you look at this, the dollar had just filled. So this is just filled that fair value gap to the pip. Now, if I had seen this on the hour, I probably wouldn't have entered, because that would indicate a stronger dollar. A stronger dollar would be difficult for the pound to have a breakthrough, so it would either continue in unison, but not a lot of pips. But obviously, that didn't happen. So that was what I should have seen. If we go back, where are we? 6. So we go back to the dollar index into 31st. Let's go here. Yeah, that's fine. No, this one here. So 8 o'clock on the 31st. So that's why I put the arrow there. I wanted to see a clear break. If we go on the 5 minute, clear break before that. Unfortunately, that happened. And because that happened, and I hadn't seen the picture of the 1 hour, I was fully into the trade and committed to it. Now, what happened here? We want to see the break, and that's when the break came. And then we had, if we continue, even nicer break, and then it came back up. What is this telling me? This is my reflection in terms of if I was doing this again, maybe I should have killed the trade. It would have been like $100 loss. It would be nothing in terms of the stress that I went through the whole day for $400. So I think that would have been a better decision to do. And as we can see, there's an aggressive break on the dollar. Breaks these previous highs. Remember, I wanted to see it going down, and then it came back and filled. If we go on the 15-minute, took out these highs, fair value gap there. And this was the area where I was like, okay, we haven't got our plan. However, this is a huge candle on the upper side. Is it an exhaustive candle? Which means, is it taking out liquidity for it to come back down? And that was what my base was. We're currently just over equilibrium on premium price. So technically, this is going to be taking out the daily high. Where could it potentially go? Up here in this fair value gap and a bit higher. The worst case scenario is it can come all the way up here and take liquidity above this. So let's add that one in. Okay, so fair value, no, buy side liquidity. So that's what we had. This was the play, and let's see what happened if we go down to 2 minutes. The dollar came up. Fill the fair value gap. Created the daily high. And let's go to the end of now so we can see the price. So created the daily high. And what did we have on the daily high? We had an actual gap here. So even the price was up there, I knew that the price will want to come down. This is at 10 o'clock. The price will want to come down and fill that gap. And when I say gap, it's not a fair value gap, it's an actual gap. Gap in price. And that normally on the 1 minute, they get filled really quickly. Do we have another one? I don't think so. But that was the gap that I saw at the time. I'm just giving you the dollar index. I wasn't trading the dollar index. This is all analysis at the same time that I'm looking at the pound. Then it came back up and filled the fair value gaps of this structure here, and then broke below, came back up, filled a beautiful recovery here on the fair value, and then melted down. And that was when I was strong on, and we had the news obviously as well. We had some news on the dollar. This is where I was comfortable in my analysis that eventually the pound is going to come up, because the next target after this fair value gap and failing to break the highs, it would be coming back to this daily level, which we're current price now on Wednesday the 1st. It's just touched the low of that. So let's go back to our trade and see how we managed it. And we're going to go back to that horrible drop onto our entry. If we go back, 31st at 8 o'clock, right? And here we are. So what happened? And why did I take 36 trades? And I remember one comment saying, you know, I'm going to stick with 1-2 trades. I'm not doing 36 trades in a day. And you are right. I don't do 36 trades either. What I was trying to do is assess if my trade and analysis was correct. And as I was doing that, I was putting in trades and taking out trades. So what I did, I killed the trade when the price came down. Okay, I don't have my, unfortunately, I don't have my MT5 to show you the levels. Luckily, I've put the first entry in. So what we did is that came up, and soon as it broke down, I failed to take my profit out, which I should have done like we said earlier. Soon as it broke these lows, I killed it here for about $2 profit. Because this was an aggressive move. It was failing to come back up, and I killed it. I took the trade out so I can use it somewhere else. Came back and didn't give me another entry until it came back down here. All right, so I thought this was the base where we're gonna base our trade from, and I was super happy to take a trade here. Now, what happened here? We had the swing high, and we wanted that swing high to come above it. However, like previously, I've said, a lot of the times I take trades before the break of structure, because I've done all the analysis on the dollar index, and I'm seeing at the same time it's hitting a fair value gap, it's going to be coming down. So that's the moment where I wanted to be in and get this low price. And let's see what happened. It crashed even lower. So let's see at the pain threshold. Now, if I've gone in here, and this is what I wanted to discuss with you, if my entry was here and this crashed down here, which would have been 7 pips, I don't kill the trade. What I do is I wait for the price to come back out, and then I kill the trade. So that's why it's 36 trades. I'm constantly killing trades when I'm not seeing what a convincing break above the structure. What a convincing break would be if we take this call tool and ghost feed. If from here it went convincingly above this level, refilled the fair value gap and continued, then I would be building up a position. But that didn't happen. What it did, it came down, I killed that trade, and then it came back down. And I was looking at that 23%. Now you're asking, ICT 23%? What is that? That is a fib. And if you don't know the Scruffy trader, he trades with Fibonacci retracements all the time. And that is how I passed the bootcamp. So I combine things from my knowledge of ICT and from the Scruffy trader and my own experience. So if we go back on the hour and we put, actually on the day, and we put a fib retracement on the last push of that move, we will see from this bottom here all the way to that top there, you will see that 23% line. Okay, that's where I found that 23% line of. And normally with Fibonacci levels, if it fails to break the 23 or fails to close on an hourly candle, then it's highly likely that it's going to go on the upside. So that was an area where I was looking for, and this was the area where I was quite confident if the trade was going to crash below it. I just didn't want to be part of it, because we did have on the left side here, like I've got a big sell side liquidity, and look how far that is down here, right? So this would have been the area where I'm like, okay, I need to get out of this. This is not good. Now let's see what happened on back to the trade. And we went down. Okay, so let's see what happened with the trade. We went down into the 23, I believe. Yeah. Then it spiked up, and this, if you're wondering how many pips this is, this was 30 pips. Now, if I had two positions on this trade, I would have been out, but however, I hadn't seen a break of structure. So I was constantly testing the market to see the build of structure. So if I would have entered on this fair value gap here, we failed to break, I would have killed it above here. If I've entered, and this were the waves that I did the 36 tradings, because we had a fair value gap filled, failed to push higher, killed the trade, re-entered, failed the fair value gap, and so on and so on. And I'm constantly trying to analyze and get a better price until I see a very clear confirmation that the ICT structure or the fair value gap and a break of structure above is taken. Now, what's the safest thing to do? Can you do this? Can you try and do this? I wouldn't recommend you doing this, because this is my way of dealing with managing the trade. And it's with my psychology. I'm not nervous when I'm doing this. This is part of a plan. Now, if you can't do this, what would be a safer? You wouldn't be trading this anyway, because there's no confirmed break above the previous highs. Okay, so the only one that you would have taken was this one, above these highs here, and would have come and filled you in, and then you could have potentially taken, that's my cat, could have taken 20 pips if you were looking for 20 pips. So there was the opportunity there that you could have done that. I didn't get that. I was constantly looking for a retracement into the previous daily high. So I wanted to bring the price all the way back up here. Now, something that also going to be a golden nugget for you. This London kill zone time, which we've used for 7 till 10 o'clock. If you go on here, you can add the last, let's say 15, London, take the New York out, press OK. Now let's see how many times in the previous 10 sessions has the London kill zone delivered 54.6 pips. You go back, 31.6. You go back, 30.8. And you do that, keep going back, 56.5. Okay, so that range there is an extreme range for the last 10 days. It has been in the past, and it has done more than that. It has done 100 pips. But what's the worst case scenario? So let's take this box here, and I apologize for the cat. There's nothing I can do apart from giving him attention and stopping doing this video. So we're going to take this box, and worst case scenario, if it did 100 pips, we will be down at that sell side liquidity value, right? So let's see what the price did. And then it came down, up. These are the waves that I was telling you that I was killing and re-entering trades. And this was the painful break above this. And this is how I made my money. Wow, look at that. So we had that fair value gap. I was in here on this fair value on the top side of that. So I had to sit, and I think I killed one trade for £127. We take the measuring tool from that to there was 25 pips. So I had to take a bit of a hit, but eventually I saw and this is where I put my fair value gaps, and I was like, finally some clarity into ICT 2022 entries. Like we said, that box, that second box of 100 pips, it hasn't done it in the last 50 London sessions, maybe less. I didn't check the previous, but it's been a while since it's done 100 pips in the London session. This was a 56 pip day, so it was a big move. What's the chance of that crashing even further? If you're getting in at the low of this, it's not very high. It would have been an extreme event for that to happen. So I entered here, I put positions in here. I was quite nervous with what had happened all day. So I took some profits early. If I had left that run, it would have been an incredible trade. And that's where the psychology of 44 pips. Psychology comes in when you've done 30 repositions of trades, you doubt even this one. So if you take the replay, and we go back. Imagine being here. You've just got filled after doing filled, kill, filled, kill, filled, kill, filled, kill, filled, kill. You did this for 36 times, 34 times, let's say, and then you have entered there and there. What's the chances of this failing to break this and coming lower and you have to kill the trade again? And that was brutal. And that's something that I need to get better, obviously. But we did get out of a very bad trade. And that's the big thing. Can you get out of a bad trade? Do you have the tools to get out of a bad trade? If your tool set is to kill the trade when it goes against you 3-4 pips, don't listen to me. Don't do what I'm doing, because this is not something from an ICT book. Okay, it's something that works for me. So when you see when you write in the comments, that would have killed your stop loss, you are right. It should have killed my stop loss. And if I was doing ICT rolls, I would have killed it and it would still work, because I would have killed those trades. I wouldn't have found an entry until this break here. So you would have had to wait above these break highs and then for it to come back down, refill fair values, and then go up. So as you can see, I killed my trade here. It was a very, very long day. If we go back to this one, how many times have that happened? 22 trades there. That's another trade that's happened, and 36 on the last day of January. Yes, we've had some days where I have to do that, 18, 23. But if you see the good days, what I'm aiming to do and get better is to get to this level. 2 trades, 4 trades, 5 trades, 5 trades. These are 2 trades. Again, I'm going to stress it out so you get it. It's 2 trades repositioned. So I've repositioned the 2 lot sizes 5 times. I hope this has been helpful. Make sure you subscribe and like to this video, because we want to start growing it even higher. I am not perfect. I'm not ICT. I'm just sharing my journey of how I'm trading. And yes, we can't all trade the same, and I'm going to try and show you what I do, but that doesn't mean that you have to do what I do. You have to find your way of trading and make it work it for your psychology, and work it, hello Phoenix, work it for your psychology, work it for your stress levels. How can you deal with that stress? And and that's going to be a journey for you. It's going to be a journey for me, because I've just started with ICT. I've done this for pretty much January is the first month that I've fully done it. But make sure you go and check him out on the 2022 mentorship so then you have a clear understanding of what I'm talking about. When I talk about fair value gaps, when I talk about buy side liquidity, sell side liquidity, all this will make sense. It won't be Chinese to you. So I hope you've enjoyed this. Leave me comments, and I try and answer every single comment. And I hope this clarified some of the stop loss. I'm sure I'm going to get a lot of messages in the future, but at least you guys who have seen this video, I won't have to tell you again why I am trading with so many trades. And you know now that it's only 2 trades repositioned over and over and over again. Right, catch you tomorrow. I've got a friend coming up, so I think I'm going to do less trading this week, but I'll try and post what we're doing. Today I'm going to be trading on the boot camp. I've got another boot camp of 200, the challenge, and try and pass that and try and do it as fast as possible. And that's going to be a challenge. Don't do this. This is my challenge, not your challenge. Boot camp, I passed it in 3.5 months. Slowly doing Scruffy trades. If you don't know who Scruffy is, make sure you go and follow him. He has something really good content, and that was my foundation around my trading, and obviously ICT. Sorry, this has been a long one. It's been a tough day yesterday with that trade, but we're back at it, and I'm trying to deliver quality videos for you every day. So make sure you like it, and I'll see you tomorrow.